Welcome to our channel. Today, we're diving into the world of stocks as an investment option and exploring some exciting alternatives that might just suit your financial goals better. If you've ever wondered whether investing in stocks is the best choice for you, you're in the right place. We'll start by breaking down the basics of stock investing, including how it works and what you need to know before jumping in. But that's not all. We'll also take a closer look at other investment avenues, such as bonds, real estate, and even newer options like cryptocurrencies. Each of these alternatives has its own set of risks and rewards, and understanding them can help you make more informed financial decisions. Throughout this video, we aim to keep things engaging and informative, so you can feel confident in your investment choices. Whether you're a seasoned investor or just starting out, our goal is to provide you with valuable insights that will help you navigate the complex world of investing. So, stick around as we uncover whether stocks are truly the best investment choice for you or if there are better options waiting to be explored. Understanding stocks. Let's break down what stocks are and how they function in the market. At their core, stocks represent ownership in a company. When you buy a share of stock, you're purchasing a small piece of that company, which means you have a stake in its success. This ownership plays a crucial role in the economy, as it allows companies to raise capital for growth and innovation while giving investors the opportunity to share in the profits. One of the key benefits of owning stocks is the potential for dividends. These are payments made to shareholders from a company's profits, providing a way to earn income on your investment. Not all companies pay dividends, but those that do often attract investors looking for a steady income stream. However, investing in stocks isn't without its risks. The stock market can be volatile, with prices fluctuating based on various factors like economic conditions, company performance, and market sentiment. While the potential for high returns is enticing, it's essential to be aware that losses can occur as well. Understanding these risks and rewards is vital for anyone considering investing in stocks. By grasping how stocks work, you can make more informed decisions about your investment strategy. When we look at the historical performance of stocks, the data reveals a compelling narrative of growth and resilience. Over the long term, the stock market has generally trended upward, with the S&P 500, for instance, delivering an average annual return of about 7% to 10% after adjusting for inflation. This consistent growth has made stocks a popular choice for investors seeking to build wealth over time. However, the journey hasn't been without its bumps. Major stock market crashes, such as the Great Depression in 1929, the dot-com bubble burst in 2000, and the financial crisis of 2008, serve as stark reminders of the market's volatility. Each of these downturns was followed by significant recoveries, demonstrating the market's ability to bounce back and continue its upward trajectory. When comparing stock performance to other investment vehicles, such as bonds or real estate, stocks have historically outperformed them over the long run. While bonds may offer stability and real estate can provide rental income, stocks have the potential for higher returns, albeit with greater risk. Understanding this historical context can help investors make informed decisions about their portfolios and set realistic expectations for future performance. While stocks are a popular investment choice, there are several alternative options worth exploring. Real estate is one of the most well-known alternatives. Investing in property can provide rental income and potential appreciation over time. However, it requires significant capital upfront and ongoing management, which can be a drawback for some investors. Bonds are another option, offering a more stable investment with fixed interest payments. They are generally considered less risky than stocks, making them appealing for conservative investors. However, the returns on bonds are typically lower, and they may not keep pace with inflation over the long term. Mutual funds present a diversified investment option, pooling money from multiple investors to buy a variety of stocks and bonds. This diversification can reduce risk, but management fees can eat into returns, and investors may have less control over individual holdings. Emerging investment trends, such as cryptocurrencies, are also gaining traction. Digital currencies like Bitcoin and Ethereum offer the potential for high returns but come with significant volatility and regulatory uncertainty. As these markets evolve, they present both opportunities and risks that investors should carefully consider. By exploring these alternative investments, you can create a more balanced portfolio that aligns with your financial goals and risk tolerance. Risk assessment. When it comes to investing, understanding the risks involved is crucial, especially when comparing stock investments to alternatives. One of the primary concerns with stocks is market volatility. Stock prices can fluctuate dramatically due to various factors, including economic conditions, company performance, and geopolitical events. This volatility can lead to significant gains, but it can also result in substantial losses, making it essential for investors to be prepared for market swings. Diversification plays a vital role in managing risk. By spreading investments across different asset classes, such as stocks, bonds, and real estate, investors can reduce the impact of a poor-performing investment on their overall portfolio. For instance, if stocks are experiencing a downturn, bonds or real estate may provide stability and offset losses. To further manage risk, investors can employ various strategies. One common approach is dollar cost averaging, where investors consistently invest a fixed amount over time, regardless of market conditions. This strategy can help mitigate the effects of volatility by averaging out the purchase price of investments. Additionally, setting stop-loss orders can protect against significant losses by automatically selling a stock when it reaches a predetermined price. By understanding the risks associated with stock investing and employing effective risk management strategies, investors can make more informed decisions and work towards achieving their financial goals. Expert opinions. When it comes to stock investments, insights from financial experts can provide valuable guidance. Renowned investor Warren Buffett famously said, "The stock market is designed to transfer money from the active to the patient." This highlights the importance of a long-term perspective in investing. Buffett advocates for buying quality companies and holding onto them, emphasizing that patience can lead to substantial rewards over time. However, opinions on stock investments versus alternatives can vary widely among experts. Some, like Ray Dalio, founder of Bridgewater Associates, argue for a diversified approach that includes not just stocks but also bonds and commodities. Dalio believes that a balanced portfolio can better withstand market fluctuations and provide more stable returns. For new investors, experts often recommend starting with a solid foundation in stocks, as they have historically outperformed other asset classes over the long term. However, they also stress the importance of education and understanding the market. Many experts suggest that beginners consider low-cost index funds or exchange-traded funds, ETFs, as a way to gain exposure to the stock market while minimizing risk. Ultimately, expert opinions underscore the need for a thoughtful approach to investing. By considering diverse viewpoints and following expert recommendations, new investors can navigate the complexities of the market with greater confidence. As we wrap up our discussion on stocks and alternative investments, let's recap the key takeaways. We explored how stocks represent ownership in companies and have historically provided strong returns, albeit with inherent risks due to market volatility. We also examined various alternatives, such as real estate, bonds, and mutual funds, each with its own pros and cons. Additionally, we highlighted emerging trends like cryptocurrencies, which offer both opportunities and challenges for investors. The importance of informed decision-making cannot be overstated. Understanding the risks and rewards associated with different investment options is crucial for building a successful portfolio. Whether you choose to invest in stocks, diversify with alternatives, or explore new trends, being well-informed will empower you to make choices that align with your financial goals. Your engagement helps us create more valuable content to guide you on your investment journey. Thank you for watching, and we look forward to seeing you in our next video.